Welcome back, investors. Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. We have got some breaking news to report right this moment. Peloton, yes, the stock that has been creamed and hammered over the past several months, is up 30% in the after hours. 30% right now. It is up. Why is Peloton up so fast and so far right now? Why has it shot up over the moon just 4 days before its earnings come out? Well, that is a great question, right? Well, there may be a suitor looking to buy Peloton. That's right. There may be a company looking to buy Peloton, and during their earnings report in 4 days, maybe it's Amazon. Could Amazon be buying Peloton? Well, that is potentially one of the suitors, according to a Wall Street Journal report. And that is why Peloton is up 30% in the after hours. Things move quickly, don't they? Especially around earnings season. Well, thank you guys for joining me. I'm glad you're here with me today. Remember, the most important thing of this show is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. All right. So while you get your questions ready, I'll just jump right into it. Stocks closed in positive territory today as a strong earnings report lifted the tech sector really high today. As a matter of fact, Amazon set a record today that was in the opposite direction of the record that Meta Platforms set the day before. And that was the amount of money, the valuation that was wiped out of Facebook after it reported its earnings was the biggest wipeout ever on history for a single company. And then Amazon, being up huge, did the complete opposite and set the opposite record for the biggest capitalization expansion for a single company in a single day. That is pretty significant. And that really helped to raise up the tech sector and the S&P 500, definitely. So, in spite of lingering concerns, though, about interest rates, because, investors are thinking about that while they are out here deciding what they should do and what strategy they should take this market with. The U.S. also today reported a labor report surprise. I was completely blown away from it. I don't know if it was misinformation or if it was misunderstood information that had every pundit to the White House talking down the jobs report. And the jobs report was actually pretty good. Now, there were some negatives in there that I'll talk about in just a moment, but the overall picture of the economy, well, it looks much better. They added, the U.S. economy added 467,000 jobs in January, and that was way above expectations of 150,000. And that strengthens the case for faster monetary policy tightening, or QT. And it also did push the bond yield much higher today. Meanwhile, though, Amazon, boy, oh boy, was it a pouncing tiger today. It jumped 15% on strong earnings. And of course, the cloud revenue, that helped as well. Snap, unsuspectingly, it's popped 62%. Pinterest popped 11% off of their good earnings. And it was all reported that places like Snap, Pinterest, Twitter would do bad on their earnings report because of what happened with Meta Platforms. So keep that in mind. The NASDAQ did jump 1.6% today, and it closed the week almost 3% higher. Now, the S&P 500, it was up 0.5%, while the Dow Jones did close little change after being down more than 300 points at the lowest of the session today for it. While the Russell 2000, it was up 0.6%. We now have, though, a very uncomfortably high oil price at $92.30 a barrel. $92.30 a barrel. That was up another 2.3% today. So oil is quickly, and I mean quickly, approaching $100 a barrel. That spells good news for oil stocks, right? Like ExxonMobil, Chevron, and a whole bunch of others. But it spells trouble for higher prices for consumers, especially while we're in winter months right now. The 10-year yield, that also rose 10 basis points to 1.93%. It's also quickly approaching 2%. The market was contending today with two different trading narratives throughout the entire day. The first trading narrative was that the bullish earnings reactions in Amazon and Snap suggest that Meta Platforms' earnings and the complete disappointment was more of a company-specific issue, which isn't a bad thing for the overall market. It's just a bad thing for Meta Platforms. Amazon carried the S&P 500 consumer discretionary sector up 3.7% to the top sector for the day. The financials, 1.7% gain, and energy, 1.6% gain, were the sectors that followed. While materials were down 1.7%, consumer staples were down 1.2%, and industrials were down 1.1%. Those were the sectors that were lower today. Now, the second trading narrative was that the January employment report, which included surprisingly strong jobs growth and higher than expected wage gains, so we got wage inflation in there too, which is good for workers but bad for the economy, would force the Fed to be even more aggressive with rate hikes. That could explain the mixed performances of the different sectors, as well as the 0.1% decline in the S&P 500 equal weight index. For the week, energy was number one. It was up 5.05%, followed by consumer discretionary, up 4.02%. And in third place was financials, up 3.6%. Now, regarding the Fed's policy and their meeting in March, the CME FedWatch tool, it increased the probability for a 50 basis point rate hike during the meeting. It jumped to 36.6% probability of a 50 basis point rate hike. That was only at 14.3% just yesterday. That's a big jump. So investors are starting to think that a 50 basis point jump could be probable. All right, in other news, we talked about Pinterest. It was another company that provided better than expected earnings results, while Ford Motor, ticker symbol F, and Clorox, ticker symbol CLX, they disappointed shareholders with a pair of EPS misses. All right, here's where we stand for the year. The Dow Jones is down 3.4% year to date. The S&P 500 is down 5.6% year to date. The NASDAQ is down 9.9% year to date, which is just out of correction territory. And the Russell 2000, it still remains in correction territory, down 10.8% year to date. But that is a little bit better than where it was earlier in the week. Okay, before we get into our deep dives, could you do me a favor? Smash the like button, share this video, and click the first link in the description or live chat to get our top 10 value, growth, dividend, and momentum stocks list, and so much more. We've done the research, so you don't have to. And speaking of research, we have updated our top 10 dividend stocks list. And it's going out to members tonight. So you don't want to miss out on that one. Our newest stock on the list has a total yield of 9.6%. So you don't want to miss out on what that one is. Now, before we check in with Bitcoin, gold was up 0.18% today. It's back over 1,800 an ounce at 1,807 an ounce. Now, Bitcoin, it was impressive today, and so was Ethereum, BTC, USD on TradingView. You can, in the description, there is a link to a free account for TradingView. You can see Bitcoin is nicely rising back up to this this middle yellow box here. It is at 40,605 right this moment. It was up, or it is up 8.7% today. That is the biggest gain. And we have to go all the way back to find a gain of this size. Well, when we hit our, the day before hitting our all-time high of 69,000, we had a gain of 6.7% on November the 8th. But that's still not 8.7%. So to find that or get close to it, we've got to go way, way back to October the 1st to find a day as equal to 8.7% or greater. We have to go all the way back to October the 1st, where Bitcoin was up 9.9% in one day. So we haven't had a big rally like this in Bitcoin for several months. It's great, isn't it? Yeah, it's looking really strong. It's coming on up here. Now, there is the 50-day moving average, and it's right at a trend line. That could provide resistance for Bitcoin. Right now, the 50-day moving average is at 43,055. So 43,055 is the 50-day moving average at this moment in time. Let's look at Ethereum, ETH, USD on TradingView. And it's had, last time I checked, it was doing a little bit better than Bitcoin. And it is up 9% on the day. Ethereum has been moving in bigger percentages than Bitcoin over the past month, even going in the down direction. Usually Ethereum is moving at more of a rapid percentage pace than Bitcoin. So in order to find a 9% or greater rally, we've got to go way back here on Ethereum to October the 28th, where Ethereum was up 9.28%. So we're only 0.3% away from surpassing October the 28th. So October the 1st for Bitcoin and October the 28th for Ethereum. That's how far we have to go back in order to find days that were as green as today was for both of the top two cryptocurrencies in the world. All right, let's continue moving on. I want to talk about uh, a deep dive here. Okay. Now, there have been plenty of strong earnings reports over the past 2 weeks. Just look at Apple, Google, Snap, and of course, the amazing Amazon, just to name a few. But the one that is, I think, the most impressive, well, it belongs to Bill.com. And the ticker symbol is BILL, Bill. Now, Bill.com has done something absolutely amazing with their earnings report. And I'm going to tell you what's going on here. They were up 36% today. 36%. They're up to $231.67 a share. They did get a little higher than that today. They did break above the $241 mark per share before coming back down just a little bit. So a big run. Why? Why did Bill have such a big run? Shouldn't growth companies be getting hurt right now? Shouldn't growth companies be getting, I don't know, kicked under the rug because of interest rates rising? Well, there's a little secret about Bill.com that you might have not heard. And rising rates actually helps Bill.com earn more revenue. So the higher the interest rate goes, the more revenue going into Bill.com's pockets. So this is a great one to keep on your radar as rates increase. Now, the valuation on this, I believe, is a little stretched. It's got a market cap of $23.7 billion, but we'll go into that here in just a moment. So, Bill.com, was fueled, its big earnings beat was fueled by a pair of clever acquisitions and a growing demand for its back office focused software. Bill posted exceptional results that easily beat expectations. The company's eye popping growth was really what stands out here, as core revenue, subscriptions, and transaction fees soared by 197% year over year to $155.5 million. Bill's phenomenal revenue growth, coupled with an 870 basis point surge in non-GAAP gross margins to 85.3%, enabled the company to break even on the bottom line. That's quite an accomplishment for an up-and-coming cloud software developer. Wouldn't you agree? During the earnings call, Bill's CEO said that the company achieved this feat much faster than anticipated. I'd say so. To attain this high level of performance, a number of positive factors must be working together, like the perfectly purring engine, which was enabled, or I should say, Bill.com enabled this performance because of management. Now, the most prominent companies driving into momentum include a few key factors for Bill. First, Bill software simplifies, digitizes, and automates many complicated, time consuming financial tasks. Within the company's bread and butter SMB market, which is small and medium businesses, many businesses are still using outdated manual processes that are inefficient and burdensome. As SMBs turn their attention towards digital transformation efforts, Bill's offerings frees up time and capital to help accelerate that transition. Adoption of its products, it's been robust, with Bill adding 8,100 net new customers during Q2 for a total of 135,000 users. Speaking to the strong market acceptance of its software, Bill recently secured a major win with Bank of America to provide them, or the bank, with a new payables and receivables system. After launching in several markets in Q2, a full nationwide rollout will continue throughout the rest of this year. These catalysts drove organic core revenue higher by 85% in Q2. Next up, this high double digit organic growth has been augmented by two key acquisitions: Divey in June of 21 and Invoice to Go in September of 21. The addition of Divey, which is a spend management application, and Invoice to Go, which is a mobile first accounts receivable software, it's created a time saving and mm, oversimplified all in one platform for SMBs. Financially, the acquisitions, they've been a windfall, adding $58.8 million in revenue, which equaled 38% of total revenue this quarter and up 55% over last quarter. Looking ahead to Q3, Divey's spend management revenue growth is expected to be a crazy 132%. Finally, the icing on the cake is that rising interest rates will actually boost Bill's revenue. Like I said at the beginning, that's because the company generates what's called float revenue, which is interest earned from customers' funds while transactions are closing. In Q2, float revenue totaled just $1 million. However, with the prospects of higher interest rates, and they're coming, float revenue could be a more meaningful contributor. For some perspective, if the federal funds rate climbed to 100 basis points, it's currently at 25 basis points, Bill's annual float revenue would jump from 1 million to 30 to 35 million dollars. That's incredible. The main takeaway here is that Bill is firing on all cylinders as demand from SMBs takes off. Not even the prospects of rising interest rates should harm this growth because the company generates more float revenue as rates climb. Now, the biggest concern is the stock's sky high valuation, with a forward PE approaching 40 times. Bill is priced for perfection. While the company's Q2 performance was virtually perfect, it will need to continue that excellence in order to avoid a letdown. So, with that being the only concern, wow, just wow. But let me know what you think. I know it's not one that many talk about or even know, because if we look at the volume, the average volume is 3.2 million. 3.2 million. Today, the volume got up to 9.6 million. And that's still relatively small if you look at a big timer like Apple or even Amazon. And speaking of Amazon, AMZN is the ticker. Let's talk about Amazon. Now, look at this. This is just incredible. It had a miss last quarter, back in October. But this quarter, man, oh man. I think I can take these circles off now. We know the stock jumped, and it jumped in after hours. 13.5% today. Not a bad gain at all. Now, just for a little perspective on how these numbers work, that 13.5% jump today, if we go in and let's do this, let's go in and look at a 1 hour chart here. I want to show you something. So you see earnings right here, and you see this big gap up. And let me help to clear this. There's this giant hole right here. Okay, there's no candle. That's because before earnings came out, Amazon closed down at the bottom of this big hole. It closed down here, and let me there we go. It closed down here at 27.81. And then the numbers came out from earnings, and this thing jumped all the way up to its 200-day moving average, and it got to a high of 31.41. So we have a low of 27.77. It looks like it changed. A low, not close, low. My apologies. We have a low 27.77, right? On the day that it before earnings came out. The market closes, we get a big jump up, a gap up, and then we're all the way up here over $3,000 a share, right? Well, this gap up gets recorded in today's 13.5% move to the upside, okay? So this gap up, it doesn't get recorded yesterday. It gets recorded today, and that's why here on the hourly, and let's remove that. These last 1, 2, 3, 4, 5, these 6 candles right here, okay? These 6 candles are today. Well, a little more than 6 right there, okay? Those candles are all today, right? So when Amazon opened this morning, it opened over here, right where the gap up ended yesterday when earnings came out. And then it rose, it broke above the 200-day moving average, and then it got to this high of 32.22, and then it sold off during the last hour of trading today. Right back down to just above its 200-day moving average, which is a good thing. It's good that it closed above its 200-day moving average. So I'll get that out of here. So that's what it looks like. And it's not a 13.5% added onto the big jump that it made in after hours yesterday when earnings came out. because after hour movements are recorded in the next day. Just want to clarify that before we start talking about Amazon here. So I think that's interesting and important to know. Just need to take a little note here. Okay. Taking a little note here because something that I'm going to do different in our live streams is after the fact. This was requested, so I got this request, so I'm going to do it. After the fact, I'll go back into the live stream and I'll put the timestamps in the video. So that way, if we're talking about Amazon, you don't have to watch, 30 minutes worth because we're already 31 minutes into this. You don't have to watch the first 30 minutes just to find the part about Amazon. You can just click and go right to it. I believe it's called chapters in the description area of the video. Yeah, so when you click that little on mobile, you click the little arrow on the right to expand the description that's with the video. And then also in the description, there are chapters for the video. So I'm going to start breaking these videos up into chapters so you can click and get right to the part that interests you the most. So that's why I'm writing down timestamps for where we are. Now I have to write down another one to make sure that I cut out this part before we get into the deep dive for Amazon. So it's right about 32 to 33 minutes. So I'll know to do that. 32 to 33 minutes. All right. All right. Let's start talking a little bit here about Amazon and what I found in the transcript and so forth. So Amazon, and I did mention this yesterday. This is kind of before we get into it. But Amazon filed an SEC notice on Wednesday, which it disclosed its holdings for Rivian. But it also disclosed that it held a 5.2% stake in Aurora Innovation. That's right. You remember Aurora Innovation from several months ago? We were talking about this one when it came out, and this is one that we jumped all over. We rode the crazy wave, ticker symbol AUR, and then we'll come right back to Amazon. But Aurora Innovation, it specializes in autonomous driving technology. Okay, autonomous driving technology for cars and big trucks. So Aurora is up massively today on that news that Amazon is an investor. It's up 22% today. However, it is down nearly 60 so ish percent from its previous highs. So this 22% move today was really cool. This is one that we talked about in yesterday's live stream again. But there is a standalone video out there that you can watch. I made it a few months ago about Aurora Innovation, and definitely check that out when you have some time. But it's one where I made a video. Gosh, it's got to be back in November, the early part of November, because we made that video back here, and then we had this big explosion. One day it was up 51% in just one day. It was just crazy. And then in a 12% day on top of that, but it's fizzled out since then. But this bottom that it reached, again, the 28th of January was a very important turnaround day in the short-term view of the market because that's when a lot of companies hit their bottom. That was the bottom for a lot of companies in this very short term window. I still believe in the long term, the market is going to drag these stocks down even further than the lows seen on January the 28th. So do keep that in mind. This is just a short term bounce that we got out of it. Okay. One thing pretty darn cool about Aurora Innovation is, and I said this in the video that I made about it back in November, I believe Aurora is going to be a bellwether for how investors feel about autonomous driving. How do you feel about autonomous driving? If you think it's something that is in the future gonna work, well, you can bet on Tesla and you can bet on, maybe some other bigger company, or you can get behind a smaller company that's all they focus on. They only focus on autonomous driving. And I think that's why Amazon has got that 5% stake here in Aurora, because they're going to need that technology one day for their own vehicles. All right, let's get back to Amazon. We can wrap today's video up. It's Friday, it'll be short. Also, the U.S. House this past week did have a committee meeting about autonomous driving, so that's also a bonus there for Aurora Innovation. Okay, Amazon, it's making a, let's call it a prime move following its Q4 report. After missing on EPS pretty bad in Q3, Q4 was a very nice bounce back quarter for Amazon. The areas that jump out are the AWS and advertising services segments, both of which posted big results. The company also announced the boost to the price of its Prime memberships. At first glance, the report doesn't look like, I don't know, like it warrants such a huge move in the stock as today's action has delivered. Revenue was basically in line. And I don't know. I did not get an adjusted EPS result. So I don't really know the clean earnings numbers. As the GAAP result favored a huge non-cash benefit. I probably can infer it was a beat because operating income, well, that came in ahead of guidance. But I cannot be sure. Amazon also guided Q1 revs below estimates. So why is the stock trading so much higher? Is it a big confusion on what Amazon actually reported? A big number from AWS segment looks like the main reason. Its 39.5% growth was a modest acceleration from 39% growth. Plus 37% growth in Q2 and 32% growth in Q1, and finally 28% growth in Q4 of 2020. Remember that Microsoft saw Azure revenue growth dip to 46% in its last quarter when it reported last week? It was a decent decline from around the 50% mark in the past few quarters. Maybe AWS is taking share. Either way, its result was impressive. As I said, I don't know how clean adjusted EPS numbers from Amazon are, but the Q4 operating income number at 3.46 billion was above the high end of prior guidance of $3 billion and above estimates. That is a decent proxy for profitability. And I guess I could probably infer an upside EPS result, but I just don't know. Also, Amazon guided to a quarter-over-quarter increase in Q1 operating income at the midpoint at $3 to $6 billion. However, that too was below estimates of $6.35 billion. Amazon did stress last quarter that inflation, especially higher wages and higher pricing from third-party carriers, would take a bite out of Q4. Prior guidance for inflation was that it should have a $4 billion impact in Q4. And Amazon said on the call that its actual impact came in above that. Amazon expects these cost challenges to persist into Q1. I'll bet adjusted for lower seasonal volumes related to Q4. I do think investors are happy that the inflation impact was not even worse than they said. I think investors love the Prime subscription price increase, as it does signals that management is confident in its business. The increase is decently marginal, and they know their subscribers will pay for it. This was Prime's first price hike since 2018, so we don't expect much pushback from consumers. For the first time, Amazon has started breaking out advertising services revenue. It actually rose 32% year over year to $9.72 billion, a robust result that let investors breathe a little easier after Meta Platforms sold off yesterday in connection with slowing ad growth, which Meta Platforms attributed to Apple's new privacy rules. The other aspect is this, is that at nearly $10 billion, it is a large business that I and many investors had thought it was. Okay, Catalyst Watch video is coming out Sunday evening, so make sure you are subscribed to get that video. And yeah, it's the most important video I do all week. Talk about what's coming up in the week ahead, what stocks are set to move, what stocks are set to lose, and I also give you my top 2 Dow stocks for the week that you can play them however you want to. You can day trade them or swing trade them or whatever you want. Look for a long-term entry point. It's I throw them out there and you choose, right? All right. Well, it's a Friday. It's the wrapping up the first week of trading in February. It was an interesting week. I'm glad it did end on a much better note than we had all maybe predicted it would have. I think one thing that pundits did is they talked down the jobs report. They said, oh, it's going to be horrible. Take a deep breath with it. It's going to be bad. And then when it came in, not so bad, right? It was like 50-50. Fewer people out of work. That's good. Even though the unemployment rate did rise back up to 4%. And then we had wage inflation. Okay. That's good for employees. It's bad for companies, bad for the economy, but it's good for workers. So we got a 50-50 we have a cooperation with the jobs report that came out today. So you can find things in it that you think are good. You can find things in it that you think are bad. But overall, it didn't pull the market down too heavily as we look at the S&P 500 here before we say toodaloo and leave for the day. All right, so here we are. We got a nice bounce there on the 200-day moving average. See, this is what I'm envisioning. Obviously, it's not going to be a straight shot down to this area here, but I do think that's where we're headed during the month of February. But today was a good, nice day. 0.5% gain in the S&P 500. It's sitting at 4,500. So we're looking pretty good. Okay, well, I'll wrap this up for Friday. I want to thank you so very much for joining me. And remember, I will be putting in the timestamps for the different companies that I talk about throughout the live stream after the live stream ends. So remember that. It's not going to be there at when we're live, of course, but it will be there towards maybe a half hour or so after the live stream has ended. The timestamps will be added by then because I'm going to plan to do it right after the video ends. And remember, also, tonight we are sending out our updated dividend stocks list, our top 10 dividend stocks list. So you don't want to miss that. Our newest stock on the list. It's got over 9% total yield being paid out. So it's a good one. 9.6. And if we look here at, I'm looking at the list right now. I'm very excited to get this list out to all of our members. This list is looking really good. Our top company, our top number one spot, has a total yield of 25.1%. 25.1% total yield. That is incredible. All right. So we'll be sending that out later this evening. So thank you very much. Click the first link in the description or the link in live chat, and that'll take you directly there. Become a member. Get instant access to our top 10 growth, value, dividend, and momentum stocks list. All right, ladies and gentlemen, thank you so much for joining me, and I'll see you in the next video.